Hello, guys. Good day. This is Anne of Reinforcement Club, your fellow positive reinforcers. Today, we're going to talk about how to increase your mortgage power in 6 months. This is in connection or in continuation to our previous topic last week, which is how to gain a high approval rate on your mortgage application. So, this game plan is intended prior to your mortgage application. So, at this point already, when you're thinking about applying for a mortgage, you have to make sure that you already have at least 10% down payment. Plus, you have to save up for payments for the solicitor, for the property tax, as well as the surveyor. And in case if you want to refurbish your house, you want to buy new appliances, you also have to have a budget for that other than your down payment. Now, speaking about down payments, here in Ireland, the banks require first time and second time buyers at least 10% of the house price. In the Philippines, some banks require 10, 20%, some banks 30%. Otherwise, as a borrower, you can actually put in a down payment of 10, 20, 30%, 40%, 50% if that is your strategy. If you're thinking that, you don't want to be in that loan for the long run, for the rest of your life, so it's way better to put in a large amount of down payment, and then the bank will be happy about that. And the bank could even give you a higher loan amount. If you can able to save at least, maybe just maybe 30% or 40% from your salary, if you can able to do that, there's a high probability that the bank can give you higher mortgage loan. And you consistently do that. So I decided to share this to you because, this might gonna help you. Even, if even you are at this state wherein you have no plans yet, you can plan ahead. I mean, nothing is impossible though if you really want a thing so bad. You can plan a year ahead, 2 years ahead to save up for that 10 or 20% down payment plus, extra. So you can plan ahead. So I just make this a 6-month game plan. This is at the point already wherein you can make, this is getting ready for for a huge long-term responsibility. I say it long-term because, mortgage usually, they last for 30, 35 years, 20 years, 15 years. So that's something long-term. It's like, not necessarily marrying the bank, but it's like an obligation, a duty that you have to keep in mind. Otherwise, you're gonna lose what you work for. Your down payment, what you spend on the house. If you happen to neglect that responsibility for a good reason or whatsoever. Now, that is why preparation is important. If you're just thinking right now, if you have no idea if you want to buy a house, but if you have a thought about it, then why not? Why you can buy it in 2 years, 3 years, 4 years. No one's stopping you. Now, in this 6 months preparation, this is already getting your act together. Like you are aiming for a higher, offer with a good deal of interest rate. So you can pick, and you have loads of options if you have a good financial performance. If you have a good financial patterns and how you look after yourself money wise. Now, let's start with month 1. So it's important to assess and plan ahead. The goal for the month 1 is to know exactly where you stand. So I'm talking about checking your credit report or credit score. That's important in Philippines. Here in Ireland, they don't necessarily check credit score. However, I remember because I declare some of my accounts in the Philippines, so they asked for credit report. But overall, it was easy for me because everything was online that time, even today. So I just have to email the bank and then do the credit score, credit report for me in the Philippines, and it was easy. So check your credit report, which means that you have to assess your records, the records of your borrowing and repayment history. You know, you have to look up to your previous loans, credit cards, payment history, including the late payments, on-time payments, your account balances. The purpose of checking your credit record is to track your financial behavior over time and the patterns of how you handle your responsibilities, financial responsibilities in the past. Another thing to consider is the so-called debt to income ratio. So I'm talking about the percentage of gross monthly income that goes towards paying, your monthly debt. Like for example, rent. You sign a contract to your landlord that you want to rent this house or this room for a year, so that's a debt. That's automatic. That's automatic to us. I signed up for that, and the amount will be totally automatically deducted from my bank account. Plus, if you have car loans, that's another debt responsibility. And if you have a credit card, that's another debt responsibility. Now, how are you going to compute this debt to income ratio? So what you're going to do is you have to calculate your total debt in a month. Like, for example, you have a rent of 700 and car loan could be 200, so that's a 900 already. And if you have, for example, this is just for example, if you have a a credit card payment of 100 per month, so that's already a total of 1,000. Let's use euro, 1,000 euro per month going outside from your bank account after the salary comes. So because those are your responsibilities, those are automatic. Now, if you have a salary of, let's just say, 4,000 euro, 1,000 divide 4,000, that's 0.25. Now we're looking at the percentage. So 0.25 times 100, that's 25%. So some banks would require you to at least to have like 36% less debt to income ratio. So if you have 35%, okay, off you go. If you have 37, 40%, 50%, it's up to the bank, That's why we have to assess ourselves prior to applying for a mortgage. Before applying for, getting ready for a mortgage application. Otherwise, the bank will just tell you, you have to improve your finances. You can reapply again, maybe for a couple of months. You have to get your act together. So make sure that you still have loads of savings in spite of having debts. Like for me before, the only responsibility I had prior to my mortgage application is just the rent, because I'm an immigrant here, legal immigrant in Ireland to work. I came here to work, and otherwise I'm not into credit cards. And that time I don't have a driver's license. I don't even know how to drive a car. So, but this time, yeah, it all just happened. I taught myself how to drive, and I got a house, which is, a comfort for me. But somehow I'm telling you guys, a house is an expense. I'm telling you it's an expense because it takes money out from your pocket. So think about it. If you get the mortgage, you have to pay that mortgage every month for, let's just say, in my case, I have to pay for that for 30 years. Plus the housing insurance, because this is bank financing, so it's important to get the housing insurance, plus tax and whatever. If anything happens in the house, I have to get the money out from my pocket again to fix it. So it's an expense. If I want to make improvements in the house, it's money outside my pocket. That's why it's an expense, not an asset. The only time that I can make this house as an asset is if ever I decided to go back to the Philippines and stay there maybe 3 or 5 years and rent this house, given that I have a good tenant and there'll be less fixes in the house. And yeah, it puts money into my pocket. That's an asset. So let's go back. So we've already assessed ourselves and we've already calculated our debt to income ratio. We have to make sure that we still have a good percentage amount of money to our savings in spite of having debts. Let's just say you have, just for example, you have those car loans, credit card responsibility. Another thing that you have to do is you have to review your income stability. So income stability is that you have to make sure that before I applied for mortgage, I actually did a couple of overtime in 2-3 months because I was crazy. I live nearby the hospital. So, in Ireland, the bank allows you to borrow like 4 times of your salary every month. Sorry about that, every year. So let's just say if you have a 50,000 yearly, gross salary yearly, 50,000 times 4. So the bank will allow you to, will let you borrow 200,000. But if you are capable of saving maybe 40% of your, salary net, if you have a net of 40% each month, then the bank, plus you have good amount of down payment, the bank can actually loan you maybe more than 4 times 4%. So way back that time, the bank was able to let me borrow more than at least a little bit of decimal point, more than 4 times 4 of my yearly gross salary. So that time, I had the approval principal of 225,000 because I totally have less expenses before. Now that I have the mortgage, I already have a fixed expenses every year, every month. So yeah, it's a responsibility. So that's why it's important to get your act together, because at this point you can actually set a realistic target mortgage amount. So prior to your application, you can do side hustles, legal side hustles. You can do something to get more bonus over time, to add up to your savings, to give the bank an impression of you that you can actually pay. If you're looking forward for a good mortgage amount, show the bank that you can handle it, at this stage. So yeah, in Ireland, lenders can let you borrow 4 times of your yearly gross salary for the first house, and the second house 3.5 times 3.5 of your yearly gross salary, and still the same 10% down payment or deposit. So the next thing you have to do is that after trying to hit a certain amount of a mortgage amount, let's just say you're aiming for at least 4 times of your gross yearly salary, or at least a little bit up. So you have to plan ahead, that you have to think that you're gonna get some side hustles over time to make sure that you have a higher net amount of money every month. So create a monthly budget which is focused on savings. Okay, let's just say you can save because you have side hustles. You show the bank that you're capable of doing overtime. So you can actually save maybe 50% of your salary. Minus all the expenses, minus food, petrol, rent, car loans. You can save 50%. So that's already a good track record for your financial performance. Plus, you can manage to give the bank at least 15% down payment. So that's already a good score for you. Another thing is, avoid opening or closing credit accounts if you ever have credit cards. And like for example, if you have car loans, rent, for if you're renting a house or a room, it's way better to get that automatic. So you can actually tell the bank that you never miss any payment. You didn't forget any payment, any debt responsibility. Now moving to the second month 2 of our 6-month game plan. To increase your mortgage power, is the goal for this second month is to strengthen the lender's confidence, to let them borrow you, give you a good deal of loan. What you're gonna do in the second month is pay your bills on time. So no exceptions. If you can pay off those high interest rate credit card, if you can pay it full, to stop it, to just pay your credit card bills and no more bills at this point. Just pay it off, especially those high interest debts. Or, this time you could also stop using your credit card and pay off the credit card bills. Okay, stop at the moment. We're looking forward for a good loan amount. Loan amount. That's what I'm saying. Oh my gosh. So, yeah, you have to make yourself clear and reliable in the face of the lenders at this point. And everything has to be automatic if you can. Automatic payment if you have, some debt responsibilities, rent, car loans. And avoid also opening or closing credit accounts. And yeah, set everything automatic. Now, moving forward to the third month, the goal of this, of this phase, the third month phase, is to lower the risk in lenders' eyes. You have to reduce debt and increase your savings. So, yes, since in the month 2, as much as possible, pay off your credit card debts and stop using credit card at all. So you can increase your savings and avoid new loans at the moment. Avoid those buy now, pay later. Even if you pay later, that's still a responsibility. That's still a debt. And avoid big purchases, because you have to be in good form in the eyes of the lenders. Another thing you can do in the third month is you must have a consistent savings, for other than your down payment and your reserves, other, down payment, 10% down payment or 20% down payment, reserves for the payments for solicitors and taxes and refurbishment. Other than that, you can still make sure that you can still able to save up a good amount of money at this point consistently. Now, keep bank activity clean. No unexplained large deposits. I remember before when my friend, that was just €1,000 that she borrowed from me, and then, before the banks were, she paid that €1,000, and the bank was asking me where does it came from, but I just tell the truth. So if you can avoid that, then do. In month 4, moving to month 4, the goal in this phase is to lock financially. To actually keep yourself. Another tactic of looking financially stable and reliable at this stage. So it's important to stabilize your income and get your documents ready. So avoid changing jobs. Okay, you already have a good savings amount. You already have a good history. You already consistently save every month. As much as possible, don't quit your job yet. Not yet. Even if you hate your boss, not yet. Not this time. Gather the documents, your pay slips, your tax returns, bank statement. At this point, if you're ready, then you can apply in month 4. Otherwise, you can, ask requirements from, bank, lenders requirements from your HR, your bonuses, overtime. You also gather your pay slips from your side hustles if you have any. And in month 5, optimize and have yourself pre-checked by the mortgage broker or by any banks. Go for high approval rate. So, pre-approval rate from, it's way better to have a broker really, because it's easier to do that. Although some brokers ask, may charge you, but some brokers, some companies, they don't charge you, they charge the bank. So what happened in my case was, it was free, but the company charged the bank. So my mortgage broker was totally free, and I could still even talk to him up to this time, which is great. That was he was just a referral from my friend. So this time you can actually look up for some loan programs, like in Ireland, first time buyer, wherein the government can help you out with your, when you buy a house from your tax. So that's a first time buyer. And in the Philippines, There is what we call a pag-ibig loans. If you happen to have like at least 20,000 per month income, those pag-ibig loans still have this low cost housing and even lower interest rate. So you can even adjust your goals if needed based on your lender's feedback. So if your lender is telling you that this is the only loan amount they can let you borrow, so you can still, if you think that's not enough with you, you can reapply again. You get your act together, increase your savings, increase your down payment, and reapply after 3 months or 6 months. Otherwise, if the bank will disapprove you, then you can always still reapply after 6 months, after a year. Look, if you really want something, nobody's stopping you, just yourself. So that's why it's better to be already have the down payment plus the reserves prior to this, prior to this 6 months game plan. Now, in the 6 month, month 6 is to, lock in and apply with confidence, which means that you've already gathered and submitted your requirements, and you keep your financial stability clean and reliable. And if the lenders will require you some papers, you submit those requirements quickly and continue avoiding new credit card accounts and even large purchases. Just behave at this point if you have other plans. And once you have your approval in principle already, which means that the bank already give you an offer that this is the total amount of mortgage we can give you in 30 years at 2% fixed rate, or you can even ask for, if you have, for variable rate, it's up to you. So once you have that approval in principle, you can finally start your house hunting within your approved range, within your budget. Now, here you go. So, in other words, buying a house still needs planning. After all, if you haven't planned, if those people who didn't plan to buy a house, it just happened that they decided to buy a house given that they already have a good financial stability. They already have a good amount of savings for the longest time because they already have a good, good behavior patterns on their finances. So they can, at any time, they can purchase a house because they're ready. But that readiness actually took them a long time to reach that point. So applying for a mortgage and being in, having your mortgage approved, it's still important to plan ahead. If you're thinking about paying off your mortgage in, let's just say 10 years, 15 years, like myself, I have a 30-year mortgage. So I'm thinking to pay it off in 15 years. So the thing is, I picked that 30 years so that I have lesser monthly payment and I can save for an amount so I can pay the principal after 5 years. I choose fixed term. Otherwise, you can still, if you don't like fixed term, you can pick the variable interest rate. You can pay the interest according to the market. Like this time, the interest rate is actually low, which is great so far. So it's all up to you how you want to strategize your mortgage payment to pay it off and free yourself from that long-term responsibility. Some people, though, here in Ireland, they have huge amount of down payment, like maybe 40%, 50%, so that they can have low monthly payment and they can save at the same time and pay it off in 7 years, 10 years. So strategize, if you as much as possible, because when you don't have mortgage, to be honest, it's actually freedom. It's like, it's like my dad in the Philippines. He doesn't think about mortgage. He just live there, pay the electricity and tax. That's all. You don't have any debt per month to think about. So I hope that, this game plan 6 months game plan will help you a lot ahead in planning your life, your debts, your mortgage in the long run. And actually, sometimes while doing this conversation, sometimes I lost track. Because I have to recall what happened before. So I'm just also sharing to you my experience, my personal experience, and I hope you have a great time listening to me. And yeah, thank you very much for your time. If you're happy about this, you can write down your comments below. Share this to your family and friends. Follow me on YouTube, Facebook, Spotify, Apple Podcasts, Amazon Music. And once again, thank you very much. This is Ann, your fellow positive reinforcer. I do appreciate your time and have a lovely day ahead. Thank you.